Digital marketing seems to be the mystery that most entrepreneurs struggle with, and real estate investors are no exception. The truth is, there are multiple avenues to success. Those experiences will be best shared by the guests on this podcast. My name is Jason Wright, and I would like to welcome you to Real Estate Investor Marketing Stories. What is going on, everybody? Jason Wright here. Pleased to bring you episode number 40 of the podcast. And as always, great guest this week. I will tell you in future episodes, because I've already recorded them, some interesting change-ups coming. What does that mean? I guess you'll have to look and keep your eyes on it and see what I'm talking about, but some things changing up here a bit. But yeah, as usual, I've got a great guest. I've got some thoughts to share, mostly random before we get into the show, but you might find them interesting. So recording this in 2024, and I have a question for you to think about. Do you think the economy, the market, is hurting your business? Do you think people are scared to invest, scared to spend money, scared to make big moves because of the uncertainty with an election year? Now, this is in no way going to become political because it doesn't matter, but it seems like the last 3 or 4 or 5 election cycles, things are always kind of crazy during election years. So do you think that's affecting your business? I ask you this question because I've asked myself the same question. This has been a weird year for us. Like, we're still cooking along and doing fine, but the market changes, man. It changes and moves, and things that used to work don't work, and things that never have worked begin to work, and it's interesting. But one thing that I've kind of arrived at, and I wanted to share this with you, is, people and businesses that have money still have money. Not everybody's broke, right? Not everybody's scared. Some people may be, so there may be seemingly fewer opportunities, but there could be opportunities with people with more money. So it might actually work out better. So my point in telling you all this is exactly this. Control what you can control. Keep having conversations. Keep doing what you're trying to do. Take care of people. Do what you say you're going to do. And I think this is the kind of stuff that matters. Conversation I had with a guy today, and we both kind of said it together, but building real relationships in your business, real estate investing, whether it's with other sponsors or people raising capital for you or whatever it is, the real relationships are what matter. That's what keeps things chugging when the rest of the free market seems to be in a place of chaos. That's my experience anyway. All right. Hopefully there's some value there, something for you to think about. The guest today, Frank Zia from Daytona Capital. Very interesting guy. So he's an LP of 696 units in Texas, potentially more by now. He's an ex-software engineer and data scientist. So his mind works in ways that my mind does not work. Successful entrepreneur, and just kind of a fun fact about him, which I've never heard anybody say, but he's got a personal luxury watch collection valued in excess of $10 million. I think he's a Rolex guy. I'm a Rolex guy, but that's a lot of watches. Very cool guy. We had a great conversation as well, so let's check out that conversation now. Hey, Frank, welcome to the show, man. Glad you're here.
Thank you very much, Jason. Thanks for having me.
Absolutely. So I don't know this story about you. Love to hear how you got started with real estate investing. What's that story look like?
Yeah, so I think everybody has their own story. For me, it's mainly for a few reasons. Number one is I'm Asian. My parents, they come from China. Chinese people like real estate. So I know this asset class for a while. And obviously, my family made great wealth in real estate back in China. So this is how I get educated how real estate generate wealth. The other reason is that I was in tech industry and I experienced 2 IPO. So I certainly have this fat check. I don't know how to deploy money. So I'm trying to basically just learn how to invest 5-6 years ago. So I started with single family, REITs, condos. Then my strategy is just like, okay, I like this one. It's close to me. I'm going to buy it. I'm going to rent it. And then I lost money because it's in San Francisco. You don't have enough cash flow to make your money. Yeah. And then I evolved into more like Sunbelt state, townhomes, cheaper, smaller, and also more cash flow. Up until I have like 5 or 6 of these, I realized buying additional homes, it just take much more effort because the banks are going to check, hey, give me all of your bank statement one more time, right? And it's going to be very pinpoint on your debt to income ratio.
Yep.
At the time I was working on tech startup, so my cash flow isn't as good as somebody work for like a public company. So I would struggle at getting cheap loans and favorable terms for me. So I was like, okay, there must be a way out. So magically I met a friend who was my colleague's husband. He introduced me multifamily concept. So I started learning, there's a totally different, bigger world that everybody, which is more sophisticated, is playing. I got to know it. So this is how I end up with multifamily. So I keep investing multifamily, 3-4 deals. And right now I'm actively investing. I'm trying to be a GP. I'm trying to deploy my money. And also I'm trying to help my friends to tap into this real estate category. So this is how I end up with.
Yeah, really cool story. And what's funny is that it hits home for me because just here in the last month and a half, I was telling my wife, I was like, yeah, we need to get some real estate that we can like go see and play with and get in our own backyard. So I want to teach my wife and kids kind of just some of the basics on how it works. And we have invested in one apartment complex already. That was about a year and a half ago. So she understands what passive investing it is. So I live on the Florida-Georgia line, so I'm less than a mile from Florida. So we've been looking at condos in Florida. And like you said, it took me a little bit to figure it out, but I was like, man, none of these investments make any sense. You can't make money on them. And I talked to some of the property managers that I'm looking at or was looking at, and they're like, if you didn't buy before 2021 with the price of condos, it's going to negative cash flow every month. There's no way around it. So I in AirDNA to look at markets for short-term rentals, and I plugged in the numbers in a few places, and some are better than other, but it's like, it's negative cash flow. This isn't going to work. So it's, what you're saying makes a lot of sense. And you can make money in Florida, but I would be really interested to see how you do it today in 2023 with condos and rentals, because I can't figure it out, not with the numbers. So
yeah, of course. So right now, I think the most of the thing that make the money doesn't work is the interest rate, right? Everybody right now is pretty much negatively leveraged. Like negatively leveraged meaning that your cash on cash is smaller than your debt, meaning that it's negatively leveraged. So my acquisition actually, it was in Tampa. At the time, I was just exploring. That was 2021. I find somebody on social media, a realtor. I talked to him, I like him. I asked him to purchase a bunch of homes for me. I think that was just like luck because I happened to catch on a market that is uptrending at the time because rent grow like maybe 20% after I bought it. So when I purchase it, I'm calculating 6% cash on cash. But when I close it, it's already 12%. So I think I just caught a very good interest rate time, plus the rent is growing.
Yep.
And obviously this year, the economic is very different. And the deal flow is very small because it is extremely hard to identify something that works on numbers, which is why I haven't deployed a lot of my cash into this space. To me, as I spoke earlier, I like multifamily a lot. When I say multifamily, it's more like 100 unit plus, 50 unit plus.
Yeah.
And for the term or return on these properties are slightly better than single family, especially in key major cities in Florida where property gets more expensive. I would say that if the goal is to try to buy like a single family rentals or condos or townhomes, I would suggest to look more secondary tertiary areas because the rent is more favorable there compared to the price. And try to do some innovative financing, for example, seller finance, right? If you can assume a loan, that would be also better. I'm just be very cautious about going to right now to finish a home with debt. There's another player. There's another way of playing in this market, which is you go all cash in there, you fix everything, and you wait for 3 or 5 years and you refi. This is a few strategy that I see from my friends they're doing, but it requires extensive amount of cash And you have to buy smaller homes, like 100, 200K.
Yep.
Yeah, something like that.
It's funny. This everything you're saying is making sense, and like I said, it's kind of exciting. The timing's totally relevant to what I've been just playing around with and looking at. But the stuff that made more sense was the lower price stuff. Like the higher you go with the mortgages, and they like in Florida, like the insurance is crazy. Like the insurance
Exactly
lost their minds. Interest rates are high, and banks are like not wanting to do. They're wanting more money down. So you just do the numbers. You're like, the one way to make this make more sense is the price of the condos got to be much lower. Like you said, like 300K or less for it to even remotely break even. You throw a property management in there, you're not going to make money. So very interesting stuff, man. So what asset classes, you said multifamily, mentioned maybe 50 units or more. What markets do you like? Did you say Sunbelt, or what are your focuses right now?
Yeah. So I have a short answer and a long answer. So right now, I'm currently still looking at Sunbelt state. It's mainly Dallas, Phoenix, Florida, these kind of state. And also these states are more landlord friendly. I prefer not to deal with, for example, California, where you have to evict like tenant for like years. Dallas, I think they passed a law that you can evict tenant like 3 days or 4 days after delinquency, which is very good. Yeah. So that's my short answer. But my big answer is I tend to focus in like one or two regions right now, because the more like at the beginning I have like this fancy like illusion that I just go here, there, I spot properties and then I buy it, then I sleep on. I just forget about it. Then I realized it's not just about the property you purchase, it's also about the property management or like whoever is operating, because we're in this brick and mortar business, right? So the person who actually operating on the property is super important. So let's say if you're buying like a single family or a townhome, you have to deal with most of the time you're not gonna fly. I live in Orange County, so I'm not gonna fly to Florida 5 hours to manage tenant. So what I did is I find a local property manager to outsource it, right? So I had a bad experience of dealing with some property manager. One example is that they're just not communicative. Like they don't communicate things up ahead of you, right? They start to find tenant last minute. So I had a property, basically I had 3 months of vacancy just due to the inefficiency of the operations. Wow. And 3 months means a lot. They just eat up your entire year.
Yep.
So I then learned, okay, my goal, because I'm currently still passive, meaning that my goal is just to figure out the money side. It is super important to collaborate with somebody, the operators or the boots on the ground. And it is hard to find like 5 people in all of the places. It's easier to find like 1 people in one region to go big. So my strategy right now is just I'm very focused on like one region. I can go there very fast, very often. I find like 3 or 5 people I trust. I extend my relationship with them. I hang out with them. I interview them. I grill them. And if I feel comfortable, I deploy money with them. That's kind of how I operate right now.
Yeah, it's
because operation is everything.
Yeah, it makes a lot of sense. And I never really understood the property management side of things about how much it could mess things up until recently, when I started talking to them myself and started asking questions going, you guys take how much? Holy cow, that's a lot of profit, and it's just, all things you got to consider. And like you say, I think a lot of people get sucked into this idea of, man, I'm going to invest. I don't have to do anything. It's purely passive and life's going to be great. And there's more to it than that, right? So
yeah,
good conversation here. All right. So what marketing strategies and tactics have kind of initially helped you find investors? Has it been mostly friends and family? Has it been outside people? How's that worked for you?
Yeah, so I'm a little bit new to this question. So obviously, if you do it organically, the first line of defense is basically your friends and family. I happen to have very affluent people, my colleagues, my classmates, my friends. They're currently working finance. They're currently working tech, and they are by definition accredited investors. Yep. So I like my first raise and also my first couple of deals went very smoothly of just typing out my circles.
Yep.
Then I realized, okay, then they're probably just only gonna invest with you like 1 or 2 or 3 times. Then you have to wait for the previous money to come back, and then they recycle with you. So the next question is, okay, if I really want to do this for like big, what's the best way to go for it? So that's why I joined Hunter Thompson's Race Master. So I get fascinated about his teaching about how to raise money using social media. So I'm currently just learning how to use social media to expand my influence to end up with investor from 3rd level or 4th level. So this is my month 3. So I'm currently in the progress of building my website. And also I just started posting on LinkedIn just to purely give out stuff for free. Just wanted to see how people like it. And if they like it, they might build a long-term relationship. If they want to invest with me, sure. If they don't, that's also fine.
Yep. Very nice. I like it. What would you say your biggest mistake or your biggest regret has been so far with this whole game?
Investing or real estate?
Investing, but kind of in regards to the marketing. So, for example, do you wish you would have done anything sooner? Do you wish you would have got on social sooner? Like, what are your thoughts around that?
Yeah, but that's kind of just unknown to me. So nothing I can really regret about. If I don't know something, I couldn't go back and fix it. But I do have one thing that I regretted a lot. I think it is so we're currently a downtrend market, right? And we have obviously strong attachment to something we purchased. And in a downtrend market, and especially when you're losing money, you kind of just trying to force yourself to forget about something instead of cut it and sell it.
Yep.
So I had a few big purchase, not just about real estate, like other big purchase. Like I'm a big watch collector as well. I have also stock investment. So in a downtrend market, everything is dropping. And when I see something that's dropping below my cost, I try to end up in a position, okay, I'm going to just hold until it recovers. But that will never come for some of the asset, right? Like, so I lose a lot. I actually lose a lot of money just for the sake of waiting. And also this waiting just kind of indecision. I'll call it indecision, meaning that not able to make a decision to do something. And that process basically cost me a lot of money. So if I have one big lesson to say is that making a decision is great. You should, like, indecision is never an option. You need to make a decision. Okay, am I selling this? Am I holding this? Because I wasn't making the decision of just holding. I just don't want to see it. Like, I don't want to lose money. But that's a very anchoring psychology. So that's a big lesson of just like, if you think it's just gonna keep dropping, just to sell it.
It's damage control at that point. And really what you're talking about is something that I think everybody watching and listening has dealt with or will deal with. It's dividing emotion and data, right? The emotional part is, I don't want to let it go because I don't want to lose money, and then maybe it'll come back, and the data might say, hey, it's only going to get worse, cut it loose, like you said. So, I totally get that for sure. All right. Can you share one story about your real estate investing journey that you haven't shared publicly before? It could be something funny, it could be a lesson you learned, it could be whatever you want to. And we're just trying to get to know Frank a little bit more. That's kind of the purpose of the question.
Okay, that's a thing I need to think.
Yeah, no worries.
Because I'm doing very canonical stuff.
You should even share your favorite story. If you have one you have shared before and it's one you really like to share, you could share that as well.
I'll share like I'll talk about one thing. I think that was just naive. So I would say, like, I tend to make fast decisions when I like a good time, right? Like a bad time is slow decision, but usually when I decide to purchase something, I make bad decision. When you're trying to sell something, it's slow. So that was before COVID, and my hypothesis was kind of naive. Okay, like real estate to me isn't really about cash flow. I have no idea how come I get that impression, but I was under that impression that real estate investment was about like capital gain. So I try, like, before COVID, I was thinking about moving to New York, and me and my wife trying to identify a condo in New Jersey, which is across the river. And we pulled the trigger. and we're thinking about, okay, like, okay, if it goes well, we're going to sell it. If it doesn't go well, we're just going to live in it. And having to know that if you purchase this home, you're not able to find a tenant. You're not supposed to rent it out within a year just because of the new building. So me and my wife actually pulled the trigger, and then COVID came. We're not moving to New York, and the house is just vacant for a year, and we lose a year of mortgage and interest rate. I think that was just like a very bad decision, due to ignorance and the type of and also it's like and also the mixed feeling of like investment and personal use. I think that's very dangerous, right? Like if you buy something, if it works out, you sell it. If it doesn't work out, I'm just gonna keep it. That's a very dangerous emotional attachment to it. In my opinion, I think investment just investment. It's pure numbers. You shouldn't mix your personal feelings with it. That's just my big learnings.
It's another great piece of advice from you, because my wife and I were talking about this condo. For her, it was all emotion. Always wanted to come out to the beach, blah, blah, blah. And I was like, well, the numbers are horrible on what you want. So it just needs to be an investment. Well, then I don't want to do it. I'm like, so we're going through that whole thing. And somebody told me the same thing you just said. They said, if you're looking at this as dual purpose, it's not a good idea. It's not going to work. So one or the other. And I was like, that makes sense. So it's the same thing you said.
But most of the time, buying is romance. Selling is finance. So it's a very common pattern in real estate.
Yep, absolutely. Absolutely, man. You're right. Yeah, when COVID hit, New York is not the place you wanted to go. That was one of the worst places to be. So glad you stayed where you were. What's one piece of advice you'd give somebody else? If somebody said, you know what, Frank, I'm going to quit my job. I'm going to start raising capital full time. What one piece of advice would you give that person?
Don't do that. Capital raising is not a full-time job until you can grow big. So it takes a lot of effort to raise money. And just raising the money itself doesn't justify a full-time job unless you are already having a lot of work to do. But at least I'm currently month 3. I don't find myself in a full-time position on this because it just takes time, right? Like if you're either, regardless of you doing this, the personal interaction world, or you're doing the scalability, the content world, you either gonna tap out fast with your friends and family, or you're gonna take time to build up your social media, right? One of my big friends is SalesMsg. He said he took 3 years to keep posting until hit hotkeys, right? So I don't think I'm better than him. So I see myself not picking up 2, 3, 4 years. And if you're just purely raising money, you're gonna have a lot of time to do something else. And if the goal is to make more money, treating raising capital as more like a side hustle at the beginning is more safer bet. Don't just quit it.
I think it's really good advice.
By the way, sorry, there's one more thing. There's another pattern I see is that when people go to raising capital, they also try to become GPs of these multifamily. That's also a way to do it. But that's also another job, right? Because as a GP, you'll be sourcing deals from agent, right? You'll be managing the property. And managing property is a very hands-on job. So that's also another option that I see a lot of people doing. I think that would work. But then you have to decide, okay, do you want to actually move into the region you want to purchase, right? If you're living in New York, do you want to move to Florida? Do you want to move into Houston or Dallas? Something like that. And that's a decision to make as well.
Yeah, very smart. I agree. All right. So we are recording this show in December of 2023. As you kind of look forward to the next year in your business, what are you most focused on as you continue to grow?
So obviously, number one is to build up the infrastructure of the system. And I had nothing from my start. I had zero website. I have no backend engines for this marketing campaigns, right? So I'm basically setting up all of these. And I'm starting my social media posting. So I would say over the next few months, my top priority is to finish this, launch my website, to at least I have some system to start to nurture my lead. Number 2 is keep posting, go to more channel. I'm currently only on LinkedIn. I'm thinking about going to Twitter because Twitter and LinkedIn are more text-based, so they should kind of share. And I'll try to be more on other people's podcasts. And then this created more video content that I can post on social media like Instagram or YouTube. So my next year, my focus is basically on content. And I enjoy reading, so I think a lot, and I can talk a lot. And I used to just talk to my wife, and she got bored. So I'm thinking about another audience. I'm finding another audience to talk to, and I hope I can provide value for free to people, and they can build up trust with me, and then we see how we can do.
Yeah, I think you'll do good with it, man. I think you're an interesting guy, and you're a very smart guy. And it's funny because when we, like in the mornings, usually I start my day, have coffee in the front porch in the sun. You can see out back, it's sunny right now. And
Yeah.
people say, no investing talk. Don't talk about buying a hunting property. Let's just focus on the day. So
Yeah.
you spend enough time with a spouse, they get sick of hearing about certain things.
Yes.
Completely. All right. So for anybody watching or listening, if they want to connect with you, learn more about what you're doing, what are some ways they can do so?
Right now, I'm currently focused on LinkedIn, so you can find me on LinkedIn. My profile is actually Frank the Tank CFA. So I'm a CFA, by the way. So I talk about investment as well.
Yeah, very cool. Well, really appreciate you coming on the show, my friend, and it was a pleasure.
Thank you very much. Thanks for having me.
Yeah, take care.
Thanks.
Thank you for listening to this episode of the show. I had a great time making it, and I hope you really enjoyed yourself listening to it. If you want to keep up with all things Real Estate Investor Marketing Stories podcast related, I encourage you strongly to go to reimarketingstories.com and signing up for our podcast newsletter. We will simply keep you up to date with what's going on with the show, new episodes, and things like that. reimarketingstories.com. So hopefully today's episode and the other episodes that you'll listen to will remind you that as a real estate investor, everybody starts at the beginning, okay? Our guest today and the other guests that you will hear on this show will share their real story, right? They'll tell you what worked, what didn't work. And I want you to remember one thing, if you remember nothing else today. It's possible for you too, okay? Never stop going and keep following your passion. Finally, today's show has been brought to you by capitalraisingautomations.com. If you're an active capital raiser and you are ready to learn the 3 areas that are holding you back from raising more capital, I strongly suggest you check out capitalraisingautomations.com. Check out our free 10-minute video there, and you let me know if it doesn't provide you value. I'm sure it will. All right, thanks again for listening to the show this week. Hope to see you next time. Take care.